as exciting as a game changer would be placed together with the words financial inclusion, but there is so much happening in the space. When I first came to Women's World Banking 9 years ago, our 40 or so partner institutions, fully 2/3 of them were NGOs, non-governmental organizations, and there were a few of them who had become regulated financial institutions. That ratio has completely changed today, and we're working not only with formal financial institutions, but with lots of other players. The other kind of unexpected thing that we would never have anticipated 9 years ago is that we would think to put a regulator on a panel called Game Changers. They're not necessarily known for being the most innovative people, but as the panel I know will be discussing, the regulatory environment has been key to some of the important shifts that we've seen in the sector. But unfortunately, we lost our regulator speaker. Poor Daniel Shabovsky, the superintendent from Peru, made it all the way here to Berlin last night and then has been summoned by Congress back in Lima, so had to turn around this morning and go back. So I can't even imagine the wear and tear on him. But we're going to try to fill in for him and bring that more regulatory perspective. But I'd like to introduce the folks that we have here with us. And immediately to my right is Claire Alexandre, who's head commercial and strategy for M-Pesa with Vodaphone. And then Aishah Ahmad, who is the head of consumer banking and wealth at Diamond Bank. And then the gentleman on the panel is Sunil Sachdev, who's the chief business development officer of GlobeOne. And maybe just a quick thank you to GlobeOne for being our lead sponsor of the conference here today. So I thought I'd just get started. This could be really interesting because this panel, frankly, is all about disruption. And I thought I'd like the sort of traditional player represented by Aishah at Diamond Bank to tell us what is a large commercial bank like Diamond doing specifically to reach out to those 56 million unbanked Nigerians. What is Diamond doing?
Thank you, Mary Ellen. Can everyone hear me?
Oh,
I thought you
glad
wanted
you
to
asked.
test the mic. Is it better? Is it better?
Somewhat, yeah.
Okay, I think I'll shout. Is that better?
Yes.
Thank you. Thank you, Mary Ellen. First of all, I think it's important not to write off the banks yet, just yet. I think that with what has happened over the last 10 years, where technology has become very important, bank customers are going online, mobile has become important, everyone has had to disrupt, right? I think the difference you find across the different participants here, the MNOs and the Fintech companies, is the speed of actually changing that business model. So everyone recognizes that some change has to happen. For Diamond Bank specifically, we're a retail bank, that's our focus. If you read about us, you will learn that what we're trying to do is to use technology. So we talk about technology a lot. Use technology to drive financial inclusion and innovative customer experiences. So for the existing customer book, we recognize that going digital and leveraging what information and software is out there is very important. And for us, financial inclusion is the core of our retail strategy, because if you look at the Nigerian market, quite a number of, in terms of the population that is banked, everyone is multi-banked. So the true opportunity is for those individuals outside the financial system. Now our goal is to find out how we can reduce the cost to acquire those customers, make them more commercially viable for us, which traditionally has not been the case, and which is also the reason why perhaps financially excluded individuals have not been very attractive from a cost perspective for traditional banks. We have two innovative products that have come up recently. Diamond Yellow was a partnership with an MNO, MTN, and basically that format was to see how we could, leverage the MNO's distribution network, which everyone recognizes is pretty significant to sign up more customers, particularly, especially in Nigeria, where you have a lot of individuals in the rural areas, particularly in those areas where you don't have a representative branch network. And we launched August 2014, and I can say that today we have 5 million subscribers on that network. Now we're focusing on driving the number of active users. So for me, just to frame the discussion a bit better, I think it is about us trying to work together with some of these participants, the regulator, the MNOs, and the fintech companies, find out what areas we can work together to drive financial inclusion. And I think the labels will start to change. So am I a bank or am I a financial company with a banking license?
Great answer. Great answer. Claire, she wants to partner with you, or are you after her customer? Or is M-Pesa after a completely different objective in terms of talent?
I think we definitely about providing more choice to customers, which will mean in some time adding to what banks offer, and sometimes working very closely with banks to do that. So it's great for me to be able to share with you some of the progress we've made. If there is one thing which I hope you'll get from this intervention today, is that M-Pesa has moved beyond Kenya, and I think there's been some interesting learning from us. We started to actually see some good traction in India, for example. In the numbers, the half-year results that we released this week, we've mentioned how now in India we have more than 665,000 active customers, for a total globally of, I think worldwide, of 23.4 million active customers. And I think this number is important, not because it's sort of big, but everything is relative, right? But more important because this is a number for active subscribers. Some of them, men and women, have bank accounts, many don't. It is indeed their first step towards formally using financial services. This number is important because these are active customers who are using the service at least once a month. And what we've realized in the years, and M-Pesa started in Kenya in March 2007, so we've been at it for about 8 years, that it was all good and well to register customers, but that's not what's going to make the difference. So when we talk about financial inclusion, we're talking about usage. And so we've been very focused on trying to look at results, which are important for us. The team in which I sit for M-Pesa within Vodaphone is a business unit. We are not in other area of the business. We're not doing sort of corporate social responsibility, or we're not in the foundation. For us, it's important to actually have this activity. And I think that's one of the great news which I think we should all sort of be happy with. And there's lots of disruption, but there's also some good progress made. The fact that a service like mobile money can generate revenues for large corporations like us show that disruptive business model. Remember, we are pay-per-use business model, which is very, I think, different to what traditional players are coming with, shows us that this is one of the factors that can sort of really put these services in a long time frame, and I think in the longer term. So I think really important. Clearly, what it has meant, and I think I'm sure it's the same even for banks and for some of the fintech companies, it's looking at the longer term from an investment perspective as well. One of the key success reasons, I think, is the championing we have found among our chief financial officers across our different sort of operations. As you will have heard, and you'll hear more today, it's all about distribution, it's about raising awareness, there's lots of education going on, which we call marketing, getting the support within the organization, and getting sort of this patient capital view has been also really, really important. So yes, we have been disrupting with mobile money, in particular with M-Pesa, but we've also been collaborating with banks. And remember that every time we have opened a mobile money operations in a country, and sort of our latest addition has been Ghana over the summer, but as well before the summer, Albania. Yes, we made things some foray into Europe. We've always worked with banks simply because the funds are always pooled in a bank account. You know, Prudential is a regulated bank, so we have our own regulation, and we are regulated by the Financial Service Authority, and we'll get back to that. But we also work with banks from a back-end perspective, but also from a service point of view. Some of you may have heard about Empower Mshwari in Kenya and Tanzania, where we offer access to savings account and loans. We don't provide the savings, we don't provide the loan. We're not regulated as a credit issuing institution. However, the partnerships we have enable us to provide the front end, to do some of the customer acquisition, and to give more convenient access to those services. Again, the service is still provided by the bank. So some disruption, some, I think, good revenues, which I think means that commercially these solutions are sustainable, but also some partnerships where the incentives are aligned.
Terrific. So Sunil, Fintech is the hot topic out there. Stock prices are going crazy, valuations are growing crazy. Is it part partnership, part long-term patient capital, or is it all disruption?
No, I think that's a great question. It's a little bit of both, and it also depends on kind of the category you're in. So for us at GlobeOne, we've realized that lots of people have been looking at financial inclusion for decades and trying to figure out what is the secret sauce in terms of getting to the bottom of the pyramid or getting to that last mile and getting that person into the formal economy. And we've done a lot of homework in terms of what different types of actors have tried: financial institutions, telcos, regulators, non-banks. And we've realized that everybody is coming at the problem with true commitment to try to solve something for the greater good. But where sometimes they stumble is there's no shared incentive. There's no single vision in terms of how do you create an ecosystem that engenders greater engagement, greater financial literacy, that allows for greater utility of financial products. And that's where we see our place, is to work with the actors that are there today, which are the telcos and the financial institutions and the non-banks and the merchants, to figure out how can we create a viable ecosystem that allows people to not only come into the formal economy, but get the utility that is required and that engagement that is needed to ensure all business models are successful and everybody that's participating in the ecosystem gets a certain return. So for us, it's less about the technology, to be honest, because we feel that banking or mobile banking or omni-channel banking, whatever you want to call it, those are services and solutions that are plentiful today. And you can get them from any type of technology service provider. What is missing is the ability to leverage that technology with the right business model and with the right set of partners in a local economy to ensure everybody has sufficient access and everybody has great utility when they use those financial products.
So I'd like to ask the panelists maybe another couple of questions, but I am very eager, as are they, to get questions from you as well. So those of you who know me well will find it incredibly humorous that I'm going to tell you how to operate technology. But if you've managed to download your app, in order to submit questions, I need you to click on the schedule icon, and then scroll down to this session, which is who are the game changers in financial inclusion for women. And then click on the little icon that's entitled submit a question, and then just type your question in there, and we'll take those after we've had another round of conversation here. So I look forward to seeing your questions. So in the spirit of Danny, who's flying above us back to Lima, we thought it was very important. The regulator has an enormous role to play in this ecosystem, this balance of players that we've been talking to here. And Aishah, the CBN made so much possible for banks like Diamond to move into new customer segments with some regulatory changes. Tell us, what was your experience with regulators and positives, negatives? How has it made your role in financial inclusion possible?
I think the biggest thing that the CBN did that has positioned us for the future from a financial inclusion perspective was tiering the KYC requirements. Because one of the biggest barriers to individuals coming to open a bank account was the sheer amount of documentation that they required, many of whom did not have that documentation. So at the lowest tiers today, you can open a bank account simply with a photograph. You don't even need a photograph because our agents, sales agents, can come take a picture with their phone, and that's it, you open a bank account. And of course, we have 3 different tiers, and these tiers have been sort of restricted in terms of transaction sizes and cumulative account balances. So for the first tier, which is the lowest, you can have a single transaction size of 20,000 naira. I think at 200, that's about $10. And the cumulative size is 200,000. So that has opened up a world of possibilities, and that's why we're able to actually collaborate with MTN to open 5 million accounts, because those customers were already registered with MTN, and we could take the data from MTN to us. There have been some inconsistencies, which they have recognized as well in that space, because banks are working in that, trying to bring more people in. The mobile money companies as well are doing that, and we find that banks are heavily regulated, of course much more than fintech or dare say mobile money, and we find that some of the projects that you have that are focused on financial inclusion get swept under that same umbrella, and you might find yourself more restricted than you should because of what your other players in that space are doing. Particularly, for instance, on the lending side today, you need the highest level of KYC to provide lending to any customers. And the way we're working around that is to partner with the microfinance companies to say, we have an existing base of 5 million customers, maybe there's a few in there that you can start to lend to whilst we work out the whole regulatory requirement. CBN has been very, very quite bold to come out with a cashless policy, financial inclusion policy, and they are putting their money where their mouth is in that respect. I just want to see more sort of active focus in that area. So for instance, today, the biometric verification number is a big thing happening in the market today, and CBN is putting a lot of weight around that. I'd like to see them put a lot more weight as well on financial inclusion. I'd like to see them reward banks, start to track and measure how well banks are doing in that respect, and start to reward banks that are doing better in that respect. I'd like to see us come up with shared infrastructure, especially in the areas where we don't have a lot of physical branch presence. I know that everything is going online, but if you look at the fact that 70% of Nigerians are living in rural populations, the branch is not dead. So how can we incentivize banks using shared resources, for instance, to more or less take financial services to everybody? I think that we're lucky to have a regulator that appears to be forward-thinking and has enabled the environment that which we find ourselves. Signing up 5 million customers in 1 year is no mean feat.
Absolutely. Okay, you heard that here. The branch is not dead. But Claire, M-Pesa, you could argue, could never have been possible without an enlightened regulator, as Aishah said. Tell us about M-Pesa's regulatory experience. How has it differed in the different environments that you're working in?
That's absolutely right. I think leadership is absolutely key, and we've seen this in Tanzania, in Kenya. We've seen it more recently in DRC Congo, for example, which, contrary to what happened in East Africa, the central bank governor at the time, around 2010, wanted to ensure there was some form of regulation in place before he would issue any license, while in East Africa and some other markets, we've been working hand in hand with the regulator for a number of years, being micromanaged in some way before the regulatory, a proper regulatory environment was in place, and I would say a proper license been issued. Frankly, if you have to ask me, do I prefer to have a formal sort of license, paper with a term license on it for money, or being micromanaged? Yes, I prefer the first. But I would say in all of the cases, we've worked very closely with the regulator. It was, very simple. It means, in my view, no surprise on both sides. Making sure the regulator understands what we do, and making sure we also understand sort of the regulator. And I would say, even if there's been different development and different attitude taken in a number of markets, lots of progress have been made, and I think in particular the role of the Alliance for Financial Inclusion there, gathering all the regulators, mostly from the South, I think has been great. And most of them have, some basic sort of policy objective in mind. This will be efficiency and stability of sort of payment system and their safety. That will be consumer protection. That will be ensuring that money laundering cannot sort of progress. And these are sort of essential pillars. What's important is what are the means that you use to actually get there. And I completely agree with you, Aishah. I think that the tiered KYC approaches which have been adopted and rolled out in a number of countries, often implementing the recommendation that the FATF adopted sort of internationally, had allowed sort of huge sort of progress. For us, it's the same. If we cannot easily onboard new customers, then we won't have the number of transactions or the number of active subscribers that I was mentioning sort of earlier. As a non-bank, the additional, I would say, ask that we generally have is around licensing. We want to be licensed directly. There's no issue that even if we're regulated as a mobile network operator by the telecom regulator, as soon as we decide we're going to play a role as a financial service providers, opening accounts for customers and managing their transactions, we have to be regulated. In my view, there's no question about that. So we need to be regulated by a second regulator. I don't think this is a difficult point in any way. However, it requires that the regulator, and I think I'm still sort of, also aligning with some of the thoughts you've shared with us, the regulator needs to take a technology neutral approach, which means it doesn't matter who you are as a provider. You might even be, frankly, in the retail space and want to offer financial services. As long as you follow a set of rules and you have the right partnerships, there's no reason why you shouldn't be licensed to maybe offer payment or sort of manage account. And this goes back to one key point for us is this is really not about the technology. And I've mentioned a little bit distribution before, how, for example, in India we have now 97,000 points of presence throughout the country, which I think if you compare with the total number of bank branches throughout all India is 100,000, so we, at par. Again, that it doesn't matter who is behind sort of these outlets, as long as there's due diligence done, there's clear monitoring, T's and C's are clear, and it doesn't matter if we are managing this network or maybe if a bank was managing this network, as long as the enabling regulatory framework is there to justify the investment and to ensure that there's some certainties both for the investors, I would say the banks or the operators, but as well as for the men and women who are actually operating this small outlet. So to me, in addition to sort of KYC, which I agree is key, technology neutral, actually service-based regulatory framework is essential. And where we've seen the greatest progress has been indeed where leadership has come from the regulator.
Interesting. So, Sunil, we see a willingness to accept regulation and indeed invite regulation up to a point with the MNOs. What about with GlobeOne and other fintech companies that you're familiar with?
Sure. So I guess the first thing I would say is we love regulators. So if there's regulators in the room, we love working with regulators. And I think we have a very unique perspective because as a very young company, we're about 3 years old now. We're able to engage in conversations with regulators with no legacy, with no bias, with no wish to push them one way or the other from a technology perspective. Because I think, as you've heard from the rest of the panel, technology is something that is there. We know what it is and we know how to use it. the regulator comes in terms of creating that environment, which is much more required today to enable these great solutions to have the impact that we want them to. And for me, I can tell you from the most recent conversations with regulators, the tiered KYC system, for example, is not working. So, we have a different perspective on that in the sense that when we look at, like the Soldazo card in Mexico, or we look at what BRAC Bank is doing with Bcash in Bangladesh, there's lots of questions now coming up with regards to who's actually facilitating the money movement, who's actually depositing the cash into these wallets, how is the Soldazo card actually being utilized today? And one of the biggest concerns that at least the regulators have shared with us in these two markets is the graduation rates. So the entire thought of tiered KYC was to get everybody access to some type of formal financial product, get them educated, get them engaged, and then hopefully graduate to a full service bank account so they can enjoy all of the services a formal financial institution can provide. But we're not seeing those graduation rates. The Bangladesh regulator told us very recently, just about a month ago, that there's some grave concerns with regards to how they're able to monitor how money is being moved within the country through the Bcash wallet, and they need to make some changes and tweaks to the model to ensure that they have greater insight into agent-assisted money movement, into people who are leveraging other people's wallets. There's a family wallet that's being used where everybody puts in their money and then does the transactions. In Mexico, what they've shared with us at the CMBV is, Soldazo was great. They thought it was going to usher in a whole new segment of people into the formal financial services, but they realized that the card is being used as a gift card. So people will go into OXXO, they'll put in some money on the Soldazo card, but then they'll give it to a friend as a gift, and they'll be able to take the money out at the ATM. So there's not a lot of money being left in the Soldazo account. The graduation rates are pretty poor from what we understand. Banamex is spending a whole lot of money on Soldazo, and I can guarantee you that we're hoping for a better return. But again, the one thing that I will agree with the other panelists is that you needed that first step, right, to ensure that there is a model out there that takes care of the onboarding hurdles, which is the number one issue that we're all trying to solve for. There's lots of people that don't have bank accounts or access to financial institutions, and mostly because that onboarding hurdle from a KYC perspective, from a reach perspective, so leveraging distribution channels on the telco side, creating tiered KYC was the right idea. Now it's about what's KYC 2.0, what are we going to do in terms of collapsing that KYC model, ensuring greater graduation rates, and ensuring greater engagement, and people leaving money in accounts as opposed to just putting it in there to then take it out later at an ATM. So we've really enjoyed working with regulators. I think we bring in a different type of perspective, and we've learned a lot from our conversations.
Very, very interesting. I think we've heard lots of issues that are particularly acute for women in the regulatory space. Anything related to identification is going to be particularly difficult for women. Documentation issues, but now we're hearing maybe the tiered KYC isn't the panacea. This conference is called Making Finance Work for Women. So how does all of this innovation and disruption and all of the exciting things that seem just there tantalizingly on the horizon, how does that specifically move women's financial inclusion forward? Claire, the GSMA tells us that 23%, only 23% of mobile network operators even know the gender of their clients. Our own digital financial service research at Women's Mobile Banking has shown that more than 50% of providers have no idea, completely uninformed about whether women want different channels, different technologies. They're not even bothering to ask. So you have to speak for your industry here. How will you move?
I'm sure that this afternoon as well we'll hear other sort of additional sort of points from I think the GSMA. But I mean, I think it's a fair point, and actually preparing for this event, I actually sort of talked to a sort of number of my colleagues in my team in London and across sort of the different markets, and that's a fair point. We do not know, in many cases, we do in some, whether some of our customers are women or men. That's indeed not the focus that we take in our day-to-day work. So I would say on the one hand, yes, there's, that's worrying, but on the other hand, and let me start maybe with that, I think that a lot of the work that we've just sort of discussed and the progress we've seen on financial inclusion are actually have, I think, helped as well, sort of men as women. And I was looking at the numbers from the recent global Fintech numbers, which again I think we'll talk more about sort of this afternoon. And I think it was interesting to see while sort of women are still lagging behind men. I think at 58% of women sort of have access to some form of formal accounts, as opposed to men who are sort of 7 percentage points sort of higher. Equally, I think the progress since 2011 has been as good, so to say, for men and women. So I would say all the work that we do in a generic way for financial inclusion to increasing choice seem to actually have as good an impact, it seems, on sort of men and women. So doesn't mean that there's not more we need to do, absolutely, but I think it's still a relatively, I would say, sort of good news, because it means that the services which we sort of offer are still sort of making a difference. In the work we do, we tend to really focus, and that's the starting point, and it should be the starting point for any providers, on what are the customer needs. I think we're talking a lot about access, how do you graduate people. If you're not solving a need, don't expect them to come, no matter how fancy the technology is going to be, or how great maybe some of the features are going to be. If you're not solving a pain point, people are not going to use the service. So we tend to, we always start with the needs of the customer. And what we're starting to do, and it's true we probably need to do more, is to start to do more segmentation. And while we were discussing before this panel already sort of among us, I was, I think, prompt to acknowledge that we need to be better at segmenting. And so the work we already do with focus groups and different sort of surveys needs sort of to be focused more on women. We've already used, we're using our service for women-specific, I would say, applications. So you'll have heard about what we've been doing and we still do in Tanzania, for example, to help women with fistula to be able to have access to treatment. It's very simple. We actually enable payment for transport. Again, sometimes very, very small intervention like this, enabling someone to send them the money to pay for a bus ride to the clinic. So we're not intervening, I would say, more than that, but using M-Pesa, enabling a long-distance transaction through the phone can make a difference. And when we started in Kenya, some of you may remember the very simple sort of words around M-Pesa, which were send money home. And who were the people who were at home receiving the money from their family away working? There was the woman. So we see that sort of, despite indeed the lack of focus that we may have had sort of on women sort of to date, a number of the services that we've been providing have sort of particular sort of relevance for women. The privacy that your account on your own device gives you, I think, will have also sort of a tremendous impact. Having the choice of having this own sort of financial instrument and deciding after, hopefully, which are the other maybe financial service provider that you may want to access sort of from your phone sort of should make a difference. So much more that absolutely sort of I think we need to do, but we shouldn't sort of forget that even the, I would call, mainstream work, which sort of we do and which other sort of mobile provider and financial service providers are doing, based on sort of customer needs, focused on sort of rural areas, on specific sort of segment, the youth, for example, will also be relevant for women. So let's look more at the segment women, but let's not also forget how women actually will benefit from being also part of other segments and having access to those services.
Now, clearly, I think segmentation is going to be a big theme throughout the day. Thank you. So I think all of us at Women's World Banking have been so impressed by the commitment that Diamond has made to not only serving the underbanked, but really making an effort towards women. But By the same token, I think we'd all admit it's been hard. It's been really hard. And with very, very, very strong efforts, we're still at 35–40% women clients. What is Diamond doing to really increase that number?
I think it's important to start from the context that you're working with. Claire is right, women lag behind men, even in Nigeria. I think 43% of women are financially excluded versus 36% of men, according to FINA. So it's a big challenge. And one thing, banks, of course, have gotten the whole segmentation, at least in terms of basic segmentation, in terms of sex, we are doing that, and also for the segmenting. So we do have data. And the experience over the years has also made us learn a lot more about, because you need to understand why women are excluded and then find ways of fixing them. So some of the factors that are positively correlated to being included, stuff like owning a mobile phone, having access to education, things like earning money. Many women don't even earn, and those that earn have irregular incomes, very low incomes as well. And then there are also cultural factors and gender-based factors. I think there was some needs analysis conducted by the Sherry Blair Foundation that showed that many women, apart from being the general low literacy levels in some areas, don't even understand how banking works. They don't understand how business works. They don't know how to find finance. And so all of these factors is part of why you don't see a lot of women sort of represented. And so for us, it's about, we have identified some of these challenges and we're working with partners to fix them. Women's World Banking is one of those partners. I mentioned one innovative product that we have worked on, which was Diamond Yellow. The second one is called Better. And for us, it not only underscored the fact that there's an opportunity to bring, because sometimes we think, okay, furthering financial institution inclusion is about poor people. It's also about serving the underserved. So people don't necessarily have to be poor. They just have to have a need that is not fulfilled, And so the Better product was one innovative way of combining technology with your normal high-touch model and a physical agent to take banking to the customer. So we have quite a number of market women that are enrolled in that scheme. And that's why when we talk about fintech, I know that it's not just going to be one solution, because on the fintech side, they'll tell you, you don't really need a human being to do all these things. You can just do it digitally. But what we found is that the women in particular sort of trust the system better because they have an individual to talk to. They traditionally don't go into banks because they probably had bad experiences in sort of the informal savings group sector where maybe they were cheated, or they just don't trust that whole banking system. So having that Better friend, we call the agent Better friend, actually has helped to increase their knowledge of what is possible and increase their trust of banks, and combine that with technology in the sense that once we collect, so when you go to the customer, she's in her market store, she doesn't have time to go to the bank, so you come, you collect cash from her every day, and then using the devices that those agents have, she immediately gets a text message that tells her, oh, her money is in her account. So those two are powerful combinations, that Diamond Bank is leveraging to bring more women in. And then in that process as well, we're learning a lot about their preferences. So with Women's World Banking, we've conducted studies that show that women want to save. Apart from just the day-to-day transactions coming to collect their money, they think about the future. They want to save for rent. They want to save for their children's education. They want to save to buy stock, and they want to be disciplined about that. So they want a different account that can, be repository for all of that. And so we're creating a target savings account that will be separate from the traditional Better account. And then also, when you have a business, of course, you want to scale, and that's where lending comes in. So we're also looking at creating a lending product, out of that. I think that banks, again, you have to call them banks because they're traditionally called banks, but increasingly you're going to be seeing financial companies that have the heart to go after and make those decisions and try new things. And what's more important is not what you call yourself and who regulates you. I think what's more important is that you have the heart and the vision to go after this segment and have the will to do what needs to be done to find new pools of companies.
Well, I think it's so interesting that what you were speaking to just relates so nicely back to Selena's emotional distance, or sense of emotional distance that women were feeling from banks. Even, and I know when I went to see the Beta project, some of these women were literally working right outside the doorstep of a branch. So it was not a physical distance, but an emotional. So I think one of the reasons we're so excited about Fintech at Women's World Banking is that the opportunities for some of the technology, the big data, to leapfrog some of the issues that the traditional banking products have had. How does GlobeOne's model particularly lend itself to financially including women?
That's a good question, Mary Ellen. So at GlobeOne, what we're trying to do and what we are executing on is connecting with banks, corporations, agents, merchants across 30 countries and creating a global ecosystem to enable greater access to digital financial services. Our goal is to be in 30 countries helping 50 million people by 2020. And where the women piece comes into it is when we looked at our target segment, which is underserved, unbanked, and millennial, and the 50 million people that we want to reach by 2020, a large percentage of them are women. And to be honest, that's why we've come and partnered with Women's World Banking. So we believe we've figured out a model that will incentivize all actors at a domestic market level to create an ecosystem that engages that end consumer and brings them into the formal economy. But one of the things that we still need to work on is how do we create the right messaging, and how do we engage that end customer, and how do we qualify that end customer, and how do we segment that end customer. And with working with Anna, Jennifer, Ryan, and others at Women's World Banking, that's one of the goals of our partnership, is to learn how do we present our technology, present our business model in a way that takes advantage of all their understanding of women's current predicaments and how we can solve for them.
You're not going to believe how great the questions are. We could have a whole other panel just based on these questions. So thank you all very, very much for submitting. So these are all submitted anonymously, but there's clearly some Women's World Banking staff member that's reminding me to remind all of you that our case study on our work on the Diamond Bank Beta project is on the tables outside, so make sure to pick that up. So thank you, Women's World Banking staff member, anonymously. I think several of the questions seem to relate to partnership, and some of them are directed at you, Sunil, and sort of what are you seeing? It seems like partnerships, particularly with banks, are key to your model. What are the best-in-class partnerships you've seen, either that you've pursued or that you've seen in the sector? And then I think I'll ask that question of the other panelists as well. Great partnerships that are going to enable financial inclusion.
Yeah. No, I think that's a great question. So the entire GlobeOne business model is founded on partnerships. And we believe by bringing in M&Os, financial institutions, agent networks, and merchants, we can create the appropriate ecosystem that not only provides financial services in the hands of who need it most, but also creates the utility aspect. When we've looked at models around the world, we've seen some great organizations, whether it's folks like Vodaphone or banks like Diamond Bank, go out into the marketplace and try to solve the problem by themselves. And they've done great work, but they haven't been able to scale. And what we believe at GlobeOne that we can help bring is the scale. Once you bring in the scale, it takes care of a lot of the other hurdles from an economics and return on investment perspective. And if we can get players to standardize the business model, standardize some of the products, we believe we can have a greater impact working with the same type of partnerships.
Aishah, first-in-class, best-in-class financial inclusion partnership.
Well, well, from our experience, I've talked about Diamond and TN. I talked about what we're doing with the microfinance banks, because even across the spectrum, all the different players too can have space to work together. We're very open to possibilities on Fintech. because it's a wide area, as Sunil has also mentioned, depends on what you're looking at. I think it's more about what applications are you using to aggregate payments, make them faster and quicker. One area that I think is a clear opportunity for banks is in monetizing, because everyone is looking at loyalty now, even for existing customer base. How do you monetize? How do you properly account for that? And how do you expand those loyalty points to make a difference to customers? And that is an area where I think banks can partner on the fintech side to really use that asset, because right now I don't think we're really deploying that. And if we want to remain in that, like follow the customer's digital space and retain their loyalty, we need to sort that piece out. And again, it will be very fluid. I expect it to be fluid, and I expect collaborations to happen across, even with companies like Women's World Banking, Afina. Everyone that sort of is committed in this space has a part to play at one time or the other to make things happen.
Claire.
So I think for me, and based on the experience we've had, partnerships work when sort of incentives are aligned. It's, as I would say, simple as that, and I think it applies to many areas of business, and I think even for financial inclusion, I think that's actually the same thing. If you don't have something, for you as a player, if your partner doesn't have something to get out of this partnership, it's not going to work. Which is a little bit why I was mentioning before that for us it's really important to, for example, have our own license. There has been cases, and there are still cases, for example, in Egypt, in South Africa, where we have to ride, so to say, on the license of a bank partner. And we work, as I said, with banks everywhere. But when in a commercial relationship, one of the party has an asset that the other cannot replicate because it's sort of regulatory-wise impossible to do so, then the relationship is slightly sort of skewed. So I would say that really ensuring that the incentives are there, that everyone is bringing something to the table and gets sort of rewarded one way or the other is really key. Which is also, I think, brings the question of what are the skills that sort of one brings to such a partnership. When we have worked with banks, for example, to provide access to savings and loans, in particular on the loan side, I mean, to me, loan is really risk management. It's a little bit like insurance. I'm not sure that as telcos, we're very good at that. We're pretty good at managing accounts with an identity and authorization for transaction. It's not very different to do that for financial services or for telecommunications. Whether we're really good at managing risk, I'm not too sure, which is, I think, why we can be good at mobile money. But I think when it comes to actually lending money, we probably sort of need to partner with the bank. So aligning incentives and knowing what you're good at, I think are sort of key things to make a partnership work.
That's an excellent point. I'm going to try to bundle a couple of questions. You've all been very polite. We haven't had the knives drawn. But a couple of people have been saying, so really, banks, retailers, telcos, and even MFIs, who really owns the client? So I think we're almost out of time, so maybe we can take that as our last question. And then just whoever it is that asked Claire to talk about digital insurance, I would love to hear the answer to that too. So maybe afterwards we can get that answer. But who owns the client?
Can I say nobody and everybody? No, I mean, so I really believe personally that actually nobody owns the client. I think that what we're doing, all from our different sort of technology, business model point of view, is we're providing added choice. As I said, there's a growing number of our customers who have an M-Pesa account and who also have a bank account. Maybe they have several bank accounts, right? We also know that in many of our markets, customers have several SIMs. So they may even have several mobile money accounts. Let's not cheat ourselves, right? So I think that while it's important to ensure that each party, again, that invests in this area gets the return that they need on these investments, otherwise there won't be sustainable sort of solution and the services will not be offered any longer. It's about providing choice to the customer and ensuring that you meet their needs.
Aishah.
Completely aligned. No one owns the customer, at least not So no one can own the customer at every point in time. It depends on where they are at that moment, what they're doing, and you increasingly see a mishmash of platforms. So there are different ways to do things. If you want to do a transfer now, bank transfer now, I think I have at least 6 options to do that, and not all of those options were provided by me as a bank. So at a point when a customer is using an MNO platform, can I really say I own the customer at that point? I don't think so. So I think it's about understanding the ecosystem and all of the players in that value chain, understanding what they know how to do best, and everyone collaborating to enhance individual skills. So the MNO is good at the distribution, I'm good at what I do, which is intermediation. Fintech might be good at, faster payments, more secure, So it's about us, all of the players, finding value in that partnership and everyone focusing on what they know how to do best, but no one else
Oh,
does.
real alignment here. Sunil, are you going to shake us up again?
I think so.
Uh-oh.
So,
We got 2 minutes to do it.
So I think everything that Claire and Aishah have said, I agree, but we have a clear perspective, and we think when we're talking about financial services, which includes a bank account, access to credit, those types of capabilities, the customer is owned by the bank. And because the bank is providing those services. Now, in the ecosystem that we talked about in the last question, it is critical that the MNOs and the merchants and the retailers participate in that ecosystem, because they are providing the utility that allows for that greater engagement that we've talked about. So, and Aishah, I think, said it nicely, when a customer engages through a Vodaphone channel to do a certain type of transaction, of course, Vodaphone is going to have the ability to speak to that customer, share certain services with that customer, provide some feedback to that customer, have a channel of discussion. But from a banking services, financial services, bank account perspective, we believe the banks should own the customer. Banks, MFIs.
Microfinance institutions. This has been fantastic. I have a sense there's going to be a bunch of partnerships formed in the coffee break. But thank you all very, very much. And